Hey there, purpose of this video is to walk you through exactly what our investing strategy is here at HBG Capital. So by the end of this video, you know exactly what it is we do and how we do it. By the way, my name is Brandon Cobb. I'm one of the co-founders here at HBG Capital. I'm excited to share with you today what we're calling the fastest growing secret here in real estate, which happens to be our business model. Disclaimer, this video is for information purposes only and does not solicit any particular investment. We are just educating on what our company strategy is. Our business model has become extremely popular here as of lately due to the affordable housing crisis that is gripping America. We are somewhere between 2.3 and 6.5 million homes short here in America. Well, the majority of those homes are entry-level housing, meaning first-time homebuyer housing. That is the most undersupplied, highest demand real estate niche in the country right now. Things like rising interest rates, supply chain issues, getting materials to build the houses, low supply, high demand have all skyrocketed home prices and created this affordable housing crisis. Our company is the solution that helps drive and solve the problem of the affordable housing crisis right here in the United States. Your partnership enables us to do our part to help solve the affordable housing crisis here in America. Right now, there is demand for millions of homes that don't currently exist. Our business model is very simple. Number one, we work with the local municipalities to identify the parcels of land that are not the highest and best use. Number two, we put that land under contract, and while it's under contract, we get it approved for a brand new housing community. This force appreciates the value of that land before we buy it. As soon as you turn it from farmland into approved new housing community, the land is worth a lot more money. Number three is we develop the land by putting the roads, the infrastructure, the utilities into the land. This adds a second layer of forced appreciation to the asset. We then develop and sell off that land to national home builders like Lennar and D.R. Horton, oftentimes through pre-sold contracts, meaning we have pre-sold the lots before we ever raise any money or stick a shovel in the ground. Many people have already realized that land can be extremely profitable. They're just not making any more of it. The other thing that most people don't realize is that all real estate starts with the land. It doesn't matter what real estate asset class you're in, it all starts with the land. He who controls the land controls the deal. Our focus is Tennessee, specifically the Nashville, Tennessee, and surrounding markets. Here's an example of a deal that we did recently called the Cottages at Carriage Way. This was a 70-home community that we developed and sold to a national home builder. The entire community was pre-sold. We made $1,184,000. Here's another one that we did, Maple Crest community. This was 74 home sites that we developed, again, for a large builder. We ended up making $1,742,000. So this right here is my story. I began my career selling construction materials to large home builders, developers, and contractors right here in Nashville, Tennessee. I then transitioned over to medical device sales, which was actually my dream job. I'd never had any dreams to be an entrepreneur or do real estate. And it wasn't until one sunny Friday afternoon at the Starbucks over on West End that I met with my boss and I learned that I no longer had a job. That was something that carried with me for the rest of my life. That day taught me that you can work as hard as you want for a company, put the blood, sweat, and tears in, work for 20, 30 years, climbing the corporate ladder. But at the end of the day, you're a number. What I learned was that nobody was going to look out for my financial well-being but me. So I started my real estate company. Since then, I've been growing and investing in our real estate business using friends and family's money. Because it's worked so well, we now have the conviction to go out and raise capital from outside people. So we started building a lot of these houses. We started securing a lot of land positions, and we noticed that we were getting knocks on the door from national home builders asking if we wanted to sell our land positions. So we have actually built houses, but right now we see a huge opportunity in being able to just play middleman and pass on all of these amazing land opportunities to the national home builders who have Wall Street bank accounts and can basically buy an unlimited amount of land from us. It all starts with the dirt. He who controls the dirt controls the deal. Remember, land is the foundation on every single real estate asset class. When you control the dirt, you have a lot of flexibility on what you can do. One of the reasons why I really enjoy inventing these new communities is because of all the different parties that are able to benefit from it. Number one is the seller. When we take that farmland and we convert it and get it approved into a new housing community, we're actually able to pay the seller a premium for their land, something they would not have been able to get for it had it not been approved for a new community. The second is the city. Each housing unit that gets invented creates forever tax revenue for that city. That allows the city to take that tax revenue, invest it back into the community, back into its citizens, and really create a community that the citizens can enjoy. Third are the neighbors. Our developments come in, it creates more value in the area. Everybody's home prices get lifted, and that is a really good thing. And finally, the American families themselves. As you know, the American dream is honestly kind of out of reach for a lot of families right now. To own a home is very, very difficult. Going in and creating these entry-level products and doing that through the forced appreciation play is something that's going to make a lot of families proud to raise their kiddos in something that they can actually afford to live in. All right, so this is our process I'm going to walk you through here. And this is very important that you understand how we build in multiple exit strategies in every single deal we do. Number one is we get the raw land under contract. And as I mentioned before, we do not buy it until it gets approved and it has been force appreciated. We buy the land with 100% investor equity. There's no bank loans involved, so nobody can call the note due on us. We remove a huge amount of risk by purchasing the land with 100% investor equity. And from then we can do multiple exit strategies. Number one is we can just land bank it. Because we own it outright with our investor partners, we sit on it. We typically do this in an area where there is a ton of development that's happening around. We just wait for that development to get built, and then we can sell off that asset because it's worth a lot more once the development is around it. Always buy in areas where there's lots of development. Number two is we will actually sell the finished lots to a national home builder. So we'll go in, we'll put the roads, utilities, and the infrastructure into the land. We will basically create a neighborhood without homes on it. And then we have pre-sold contracts with national home builders like Lennar and D.R. Horton, where as we finish developing the lots, we will sell those off to the national home builders. Exit strategy number three, if needed, we can actually build the homes. Like I mentioned, we are general contractors. We are licensed and bonded to build homes. We've built tons of homes. The worst case scenario is if we get stuck with a piece of land, we can actually go in and we can actually build the homes on it. So we have multiple exit strategies here to mitigate risk. Again, this is one of the fastest growing secrets here in the real estate community, just because people are starting to realize there's a huge opportunity to help with the affordable housing crisis, because you can take that piece of land and you can 2 and 3x the value of it by simply getting it approved by the city for these new housing communities. Currently, we are only doing business in Tennessee, specifically Middle Tennessee. Here are a few reasons why. Number one is Nashville, Tennessee has been one of the fastest growing cities in the United States. Number two is growing employment. Very large corporations like Alliance, Bernstein, Oracle, Amazon have set up shop here, and they are moving jobs here in droves. Also, no state income tax. Very popular to move businesses here because we're not hitting them with those high income taxes. Nashville, Tennessee and the surrounding suburbs is very affordable. We offer that $2,500 per month mortgage product. And so you can find these $300,000, $350,000 brand spanking new homes. Nashville is also known as the music city capital of the United States. We have more music produced here than any other city. And because of that, there's year-round tourism to the famous Broadway Street downtown. So unlike other markets that may experience seasonal tourism, Nashville has year-round tourism. There's also a number of growing institutional investments. So one of my favorite things to do is Google the Nashville skyline before and after, and you can see how many skyscrapers there were in 2010 versus now, and the skyline's more than doubled. That's because there was about $5 billion of institutional money that moved into Nashville from 2010 to about 2018. And right now there's over $7 billion of institutional capital. And last but not least, there's national home builders here. Like pretty much every single national home builder has come to Nashville because they've recognized the opportunity here. We've been in business doing this for over 8 years now. We've got over 1,100 units that are currently in the pipeline. And I know that we are not going to be able to develop 1,100 lots, which is why we're seeking outside capital. We've been traditionally using our own money and friends and family money. And with the proven business model, we are now ready to scale this exponentially right here in our local market. This slide says that we're time tested, which is true because this business model has proven itself time and time again, even through the recent market correction that we had in 2022 when interest rates skyrocketed. We had crazy bank failures. There was supply chain and logistical issues getting products to the United States. We are still here. Now I want to show you guys exactly how we mitigate risk in each of our investments. Number one is multiple exit strategies. Number one, buy it outright, own it, and land bank it. Number two, we can develop and sell the finished lots to builders. Number three, we can actually build and sell the homes ourselves. Number two is controlled debt. This is very important. A lot of the times we are not going out and getting bank debt. For those deals that we do end up introducing some kind of leverage, we do a very low amount of leverage. This is usually 50% loan to value with our land development projects and below 70% loan to value if we end up building the houses. But we would rather use private sources where we're able to control that debt or have a 3-4 year bank note on something that's going to take 2 years or less. We do that because we just don't want to run into a situation where the bank runs into some kind of calamity like what happened in early 2023, the banking crisis, or just something where the banks call the note due. We want to be able to have controlled debt through private sources that allow us to hold that asset through these market corrections. Number three is the ability to hold. We had an event where there was a crazy interest rate rise in 2022. We bought the land, we were about to develop it, and we just stopped. We said, look, let's just hang on and let's see what the market does. We waited for a year and a half, market bounced back, we're able to follow through. So that ability to hold each of these deals and not be in distress is very crucial to our risk mitigation strategy here. Number four is forced asset appreciation. So we've got 3 different levels we can do this. We named transitioning it and getting it approved from farmland to new community. That's number one. Number two is force appreciating it by putting all the roads and infrastructure in it. And number three, if you actually build the houses, that's another way of creating equity in the deal. That's why it's important to have multiple exit strategies lined up that each will enable additional equity to be created through that exit strategy. Number five, an end buyer contracted. So I told you that we always pre-sell all of the stuff that we do. If it's land, we've got it pre-sold. If it's developed lots, we've got it pre-sold. And, you know, we've even sold homes to build to rent funds that we've built and actually sold. So having the asset pre-sold before ever starting it is a huge way to mitigate the time risk and speculation of just putting it on the market. And number six, downside protection. Just to give you an example, that Maple Crest community deal that I showed you earlier here, we were selling those lots for $85,000 a lot. And our all-in cost on it were about $61,000, $62,000. And so you'd have to see about a 25% decline in value before investors basically broke even. We want to see significant downside protection in all of the opportunities that we are managing. This is an example of a projected liquidity schedule. This is what you can anticipate seeing on here. I've got about how much time it takes to actually do the land development process. Typically, the first phase gets developed in about a 9-month period. This is when we go in and we're putting all the roads and infrastructure in, and we've got it pre-sold to a national home builder. Usually, we're in and out of projects in 24 months or less. Your opportunity to capitalize. So in our opinion, the housing bottom is behind us and most don't even realize it yet. Our clients, home builders of America, are hungry for entitled, developed land, and that is what we do. You're always in the know. So we want to build investments to be transparent and design them to be insulated against market volatility. We do monthly investor updates. We do newsletters that gets released. So there's a detailed breakdown and analysis on how each investment is doing. doing on a monthly basis. I've personally invested my money in many other syndications, and the biggest problem I see is the breakdown and lack of transparency in the investment. So I've taken that personal experience and designed our investor experience to feel like you are right there along for the ride and in the know every step of the way. All right, do you want to get involved in our business model, what we're calling the fastest growing secret in real estate? If that's the case, step one is to book a discovery call. Click the link. We want to get to know you. We want you to get to know us. Let's make sure that this is a fit first. On that discovery call, we're just going to get to know each other. We're not going to be going over any deals or any specific numbers. It is strictly a get to know you call to understand your past investment experience, who you are, what you've done, and what the risk tolerance is, just what you're trying to build in general and how we might be able to help out with that. Step two is after we get that out of the way and we've answered any questions that you have, then we can start to look at future deals together. Once we find something that is a fit, we can then hit the button and hit the invest button. Please, 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 if you have questions, contact our team. We're here for you. And that is the conclusion of the presentation. Thank you so much for your time. I hope you got some value from this. Again, if you've got any questions, please reach out to our team.